Welcome to the Stage Analysis members midweek video. It's Wednesday the 14th of September, just pushing over into the 15th here in the UK. I'm going to start off tonight by going through the S&P 500 before going on to a bit of short-term market breadth and the watch list stocks from the last few days. And I might finish off just with a quick chat about the Mansfield relative strength indicator that I've added on the trading view this week, which I've done a little bit of updates for. So a few of the options, but I might do that as a separate video. It's quite late, so I'll get started. So starting off with the S&P 500 here. As you can see, the percentage of stocks above their 20-day moving average ticked up a little bit today, back up to 27.2%. But you see we had this sharp decline yesterday. There was a big gap down move on the day across the market. Really shook out a lot of stocks, but there was some decent in the actual watch list scans. There was quite a lot of decent looking setups, to be fair, as stocks showed a lot of relative strength in certain areas of the market, especially the solar stocks, which I'll get to a little bit later in the video. So we go through the S&P 500. We're still in this horizontal range that we've been in for a good 3 or 4 months now, with a shake at the bottom and a up thrust at the top. We're still basically in the middle of the range, but pulled back underneath that 50-day moving average yesterday and below the 21-day. And so today's consolidation day didn't manage to rally back up very much. So we need to see a strong reversal tomorrow, or things could start to get a little bit more ugly again. It could be on for a test of the lower end of the range, as generally when you have a sharp move down like this, you want to recover that very quickly, or that's obviously a sign of strength, weakness there. We're still underneath this resistance zone. We haven't been able to get out for the last 4 or 5 months now, since the broke down more convincingly into stage 4. Obviously broke down earlier in the year multiple times, but shook out a few times back above again. So we didn't get that convincing stage 4 breakdown until much later in sort of April, May time. So now consolidating potentially in stage 1. There's a lot of stocks actually developing stage 1 base structures across the market. So certain areas that have been coming up in the watch list scans, particularly of late, include the software groups have been developing quite a lot. And there was a lot of bank stocks last week on one of the days, and the Chinese stocks as well. But software has been a big focus of the last few weeks, so it's an interesting one. It's been obviously beaten down quite a lot, and it's quite a large group. So I did do a group focus on that last Wednesday, so you can catch up on that if you want to see that from before. Let's move on. So a little bit of short-term market breadth. This is the Nasdaq percentage of stocks above their 20-day moving average, back to 27.06%. So this covers around 3,500 stocks. So we're still in the lower range here. We did have a pop out and came all the way back in again. So looking for this to move up and out strongly, get back through that halfway point, back towards the upper zone again, for that to turn more short-term positive again. Same across the Nasdaq 100 here, down in the lower range, just popping back up in the NYSE, 32.28%. But we need to see some strength back through that again. So all of these small caps in the lower zone, 18%, and the S&P 500 at 27.2%. So they're all in the lower zone again. So sort of risk-off environment in the short term there for those. We look at the percentage of stocks, the bullish percent index, Nasdaq composite at the top here, and the NYSE bullish percent index. So we use this as a short-term timing tool. So when it's above this 30-bar moving average, this is a 1 hour chart on the intraday using the bullish percent index. So when it's above this 30-bar moving average and rising, and both of them are together, then it's on a short-term positive environment. And when it's below, on a short-term difficult environment. You can see we've just popped below on both. The moving average hasn't yet rolled over, so I'd give it a neutral / difficult environment at the moment on the short-term breadth here. There was a few stage 2 breakouts today, so I highlighted StarBucks at the weekend on the weekend video when we were in stage 1 last week developing there. I said had potential for a stage 2 breakout attempt, and it's moved through quite strongly today. Had only a 4.52% on the week here. If we look at the daily chart of this, you can see it's 5.53%, but strong volume, more than 3 times the daily average volume on this. So breaking out from the lower range, it's been making a sort of cup curving type pattern, rounding bottom, whatever you want to call it, since with the inverse head and shoulders, all sorts of different types of patterns. But basically it's been developing, coming out of stage 4 into stage 1, and we had a stage 2 breakout attempt today. You can see volume at the moment on the weekly, still Wednesday at the moment, so we've still got 2 more days in the week, so it's a little bit above its average weekly volume, so it has got potential to meet that 2 times average weekly volume requirement that we look for. But obviously the initial, when you get an earlier in the week breakout like this, you're looking firstly at what the daily volume is, and the daily volume requirement is 3 times. And so, as I said, it was more than 3 times today. I think it was 3.6 something times the average daily volume. So initial daily requirements met, so we need to see that follow through into the end of the week and close strongly, and then to meet that 2 times weekly volume requirement. You can see relative strength versus the S&P 500 strengthening above the 0 line here, which is just starting to turn a little bit, starting to flatten out, but still tiny bit declining there. Another stage 2 breakout today that was from the watch list as well, so I highlighted this one on yesterday's watch list, followed through strongly today. So you can see if we go to the daily chart on this, 15.45% move today. So yesterday showed some really strong relative strength here, had a gap up move, was up 5.36% from the open there, but a gap from the previous day. So it was up 13% yesterday or so, and followed through with another 15% move today. So it's had a really strong move to move out into stage 2 this week. You can see the developing pattern. The majority of the base structures developed during its stage 4 decline. It was one of these SPAC stocks here. You can see around that when they listed at $10 there. So you can see it was a previous SPAC by the looks of things. Had that decline like most of them did into stage 4. It's been building a big base since December time there, slightly sloping down, so pushing out more than 2 times the average weekly volume so far. Obviously a strong move so far. We need to see this continue to hold above this 6.5 level-ish, potentially this higher zone as well. If it can hold up in this range, continue to push through, then that will be a new stage 2 breakout. But obviously we haven't ended the week yet. It could still fall back into the range again. If we see a squat and it comes back in again, then that will just continue to be stage 1. But looking promising at the moment, having a very strong week.